Welcome back to Markets Today. Second week of trading, the day being Tuesday, 10th of March 2020. It's an interesting day for you just because yesterday we did see a massive drop on oil prices. That was a 30% plunge, and this had a trickle-down effect on global and local equities. Today, we have seen the local equities with Safaricom and KCB bouncing back. Question is this a dead cat bounce? Is it the right time to buy? We do think that we're going to see extensive sales by the foreigners who want to take advantage of this opportunity in terms of the recovery in prices. But then the question is, should you be buying it if you want to go on a long-term basis? That's a conversation that we'll be able to answer later on. Aside from that, we are looking at our budget statements. The Budget Appropriation Committee, which represents Parliament, has had a look at this and come up with some proposals in terms of what they think needs to be considered as we go through the budget cycle. With us in studio, we are joined by Mr. Churchill Ogutu, who is an economist at Genghis Capital, and he's taking us through his report and his findings. Now, before we took the break, Churchill, you said that what we are going through, a situation where you're spending almost all that is coming in for your consumption, you're just trying to get by on a day-to-day basis. It's nothing unique to us. It happens in other African countries. It happens in the US. It was the cause for the subprime financial crisis that happened with people taking on too much debt that they could afford. Fair enough. But before we took the break, then I asked, are we in the same economic cycle compared to US? And in other words, they should even be investing at all, or should we just continue consuming every single shilling that we make?
Well, in terms of economic cycle, we are not in the same range lane with the US. We are in a different, totally lane as Kenya. But that said, I think there's still that case for investing. We can't gainsay about, we can't continue not ever emphasize that there's that need for investing, because if you look at it, the other side of the coin is now consumption.
But then are you borrowing to invest? Because when we looked at the individual household, what we've said, Churchill, if it's Mbithe, how the government is operating is Mbithe say, I make 100, but I spend 99 of that just to pay, to go to the salon, to go get my car fixed, to put fuel, to pay my rent, to pay my groceries. Very basic. So I'm using 99. But then Mbithe has a long-term plan of making investments. So if I'm always remaining with 1 shilling, that means that I'm always borrowing from the bank at 14% to make investments. Is that the right way to keep going? Or should Mbithe just say, you know what, you just wait fast, let me just continue consuming, or I figure out how I'll stop consuming, or I figure out how I'll enhance my revenue, because I really don't have any space to make any investments, which is what the government is literally doing.
Well, let me just put it from the case, the big brother here, Kenya, in terms of its investing decision, because ultimately that's where the issue lies. You find that yes, you have your salary. Now that's the ordinary revenue you're talking about, the 1.86 trillion, and then find out of that you can either save, you can either pay your bills, buy your shoes, as I know you are a great lover of shoes.
No. I've been personal finance this year, 2020, but on a light note.
On a light note, yes. So saying that now you can either invest where the decision to invest in could matter, and we know even the history of Kenya that there are some development projects that at some point have stalled. There's not been other issues that that have cropped up, which has also made that those projects have stalled midway. So it all comes to the choices that we make. Is it a viable project, one? Is it something that is sustainable, two? Is it something that will generate revenues in year 2 or 3 after you've made the investment? Even on a personal level, these choices we make on a daily basis, on a personal level, also is replicated on a macro level, and also most people just question the viability of some of the development projects that have been made. Because you find that there's a project that has been made, of course there's just gestation period of say 5 years before now we can be able to get the revenues.
So then the question is the validity.
The validity of the investment decisions you make.
Allow me to interject on that point, Churchill. This week, Lebanon has announced, the president of the executive office in Lebanon, equivalent of the presidency, has announced that it will not be able to make good its debt obligations of $1.2 billion. And what it said is corruption ate into all the money that was supposed to be allocated to projects. And over and above that, Lebanon said that its debt to GDP ratio was 140%. Now, I know your note covers debt financing, and I'm sure it's something that the government and everybody talks about. Are we in a situation where we could, maybe in 10 or 15 years, look like a Lebanon and default on our debt?
History is quite awash with this kind of series.
Yes, it is.
Argentina 2001 defaulted at some point. Mexico 1982 defaulted on its debts. So it's not the first time that we are seeing defaults on this massive scale. So just to put it in context, is what will lead to that kind of debt?
That's a better question.
Yeah, that's okay. What could lead to that debt unsustainability? That's the big question. Is it that the monies we get, they don't go to viable projects? Are they going to fund some pet projects which don't have return for the economy, or the economy so as to sustain even the debt servicing? So those are some of the questions that we look that people look at going by. But that said, I don't think that is the end of the world for Lebanon. We've had Argentina. This not even 2001 was not the first time it defaulted. It's defaulted most times. But just a bit of after defaulting, how do we bounce back to enable some sustainability, to even bring back those investors in the economy? So those are some of the things that even investors, even after that one default, they are still been funding Argentina. And I know that even at some point last year, they were also on the verge of defaulting.
So then, but can Kenya get to that level? When you look at what the Appropriations Committee is saying, what the Treasury is saying through its budget policy statement, in your own analysis, are we at a material risk of getting to this level in maybe 5 or 10 years before we achieve 2030, the vision?
Looking at the debt servicing cost, even for the next financial year, I'm looking at around 400 billion shillings. So that's roughly a fifth of the ordinary revenue, just looking at it in terms of, total revenue. So that's a fifth of that. On that level is sustainable. In terms of, we're not taking 100%. So
it's 20% of revenue, it's manageable.
It's manageable, yeah. And considering that half of it is now domestic debt, domestic refinancing. So the big issue is now in terms of foreign financing, because that's where the issue is. Even in that case for Lebanon, it was in terms of the foreign repayment. In terms of domestic, there's a way we can do with that. So I'm looking at if it goes even further to a tenth of the revenues that you can collect. So I think it's manageable. Unless now we find a scenario whereby the shillings collapses vis-a-vis the dollar now for every, instead of...
You're preempting my question.
Yeah.
So is that a risk that we stand? And CPK did make also a formal pronouncement a few days ago saying that it will be coming to the market for about 100 million every month. It's a negligible sum. But is that an indication that there could be possible weakness in light of what's happening globally, coronavirus, the plunge in oil prices, and what's happening locally?
So far, I think even just looking at the main channel of that, the oil price has been a benefit to us, considering that we are net importer nation. So that's a plus for us. So it tends to reduce the risk of a collapse in the Kenya shilling. Had it gone the other way around, whereby now Russia, Saudi Arabia coming together and say they are reducing output totally, so that's when we see a uptick in oil prices to the $150 level that you saw around 2008. That's when you can see, well, we could be going to levels where it could be unsustainable. But
so there's nothing to worry. So
in the near term,
the currency trades range bound 100, 102, give or take, but nothing material happens to the currency
in the near term. Based on what's happening from the global frontier.
All right, fair enough. Then, as we come to the conclusion of this discussion, a couple of things I get from you. The government will be taking cash out from Bithe in terms of taxes.
Definitely.
Expect higher taxes. So the government is taking money out of Mbithe. But if I'm thinking about Mbithe of the future, and I want to start investing, should I be giving my money to the government? Should I be putting it in stocks? Where am I going to make money now? Because the government will keep taking, but I want to whatever remains with. How can I make it grow?
Well, it's a balance, just looking at some factors also that we need to factor in. And one of the things, if we want to look at equities, is the growth trajectory still positive?
Yes.
And I think in the near term right now, it's these shocks that are coming in the market, the coronavirus, of course, to a certain extent, even the global oil prices, the decline of that. But I think by and large, because if you want to get into equities, you're looking at ownership of a company, and you're looking at the fundamentals to it. So it also drives not only to the macro variables, but also look at the fundamentals of company, which might be isolated. So those are some of the factors that we're looking at. But in terms of course, investing into bonds, that's it's called safety haven. So most people just fly to that because your capital is protected, you have that income on a semi-annual basis. So those are some of the factors that some of the investors look at if they come to the fixed income market. Equities is more of looking at different factors.
Okay.
Yeah.
So you have to be selective in terms of your point of entry, your point of exit.
Yeah.
Maybe on equities, I actually think that what we have seen today, we have seen the market rebound. I do expect foreigners to actually take profits and to exit the market. So I would certainly not be a buyer. I'd lean towards being a seller of stocks on the NSE, at least in the short term.
Yes, I think at this point, that home buyers taking a big chunk of the investors, so they are rushing, getting the exits from the frontier markets, emerging markets, going back to their home countries amidst all these coronavirus concerns. So at the moment, I think we just wait things to stabilize before you do anything. Others will be clutching at falling knives.
Exactly. Yeah. Okay. Now we have come to the end of the show, but I want to just create one scenario for you as we end. So you are back at home and you are talking to your grandmother and her friends, and they're very excited. Our son went to Nairobi. He's an economist. Hata anaendanga kuongea na Trump, amebakisha kuleta Barack nyumbani. How would you summarize your report when you're talking about Kenya to her? In just one or two sentences. No, you don't have to talk in your mother tongue, just in English. What would you tell her? This is what is happening. This is what you need to do. How would you summarize what you say?
At least she doesn't put me on the spot like you.
Okay.
But anyway,
she needs to. Yes.
Anyway, I'll just say that, just to put it to their level, is that think about it, that you have this salary, say it's 1,000 shillings, and you're spending 1,500 shillings. So either you reduce the spending to match your revenue, or you go to borrow. But even if you go to borrow, now that's the debt that you're looking at. It now has some cost to it. Are you going to, you look at the sources of borrowing. Are you going to borrow from other people within the household, or are you going to a next door neighbor who, because they don't know how the situation you are, they may be able to charge you at a higher rate. Okay. So it's a bit of a balance between reducing the revenue spending or borrowing, but looking at the kind of borrowing sources
that are coming
through.
So
that is also the case that you are seeing.
I think your grandmother would be proud, would certainly be proud. Thank you so much. That was Churchill taking us through his report that is evaluating the pronouncements by Parliament through the Budget Allocation Committee vis-a-vis what the budget policy statement says. This is not an easy conversation to have when we're talking about all the numbers that represent the economy of Kenya in terms of what is expected to happen over the ensuing 12 months. But in a nutshell, what Churchill has told us is this: the government will keep taking cash away from you in terms of additional taxes. And if you want to grow your future revenues by way of investments, then possibly the government bonds and the treasuries would be a good, safe haven to put your money into. Because for the business community, there will be a bit more volatility as the government looks for funding to pay its payroll as well as to be able to manage its debt. The assurance Churchill has given us is this: at least we will be able to see it through to Vision 2030. In other words, we are not going to go belly up. At least what that tells me is everything continues as is. It does not necessarily get better, but it's better for you to be armed with information and knowledge. I'm sure this report is available on the Genghis Capital website. It's certainly something that you must be able to read and understand to empower yourself in terms of knowing where the government finances are going and where they are coming from. Thank you once again for joining us, and see you tomorrow, same time. Good afternoon.